Hello, everyone. Welcome to this episode of Stocker Team Special. On this episode, we'll be talking about Robinhood Ventures Fund I, ticker symbol RVI. Robinhood Ventures Fund I just listed recently, last Friday actually, on the New York Stock Exchange. But what exactly is RVI? What exactly is Robinhood trying to achieve with this? Of course, Robinhood perhaps is the fastest growing trading and investment platform that is now going very global. Actually, is one of the stocks in Stocker Team 20 stock picks, which is a premium Stocker Team stock picks that we actually research and invest in. So, Robinhood is making this move to actually list a fully listed fund for retail investors to actually get exposure to private companies. So, all the major private companies that you know of, from SpaceX to Stripe to Databricks to all manners of very, very interesting companies that have remained private for a long while. So basically, Robinhood Ventures Fund I, RVI ticker symbol, is actually a publicly traded venture capital style. It allows anyone, retail investors who don't have accreditation, because before you can invest in private companies, especially in the US, you actually have to have some particular threshold of earnings, particular threshold of licensing, and even approval. So Robinhood Ventures Fund I is giving retail investors the opportunity to actually invest in these private companies that are doing not too bad. Some of them are doing exceptionally well, like the likes of Stripe, the likes of SpaceX, the likes of OpenAI. They've remained private for a long while. So on this episode, we'll be discussing what exactly this is about. Should you invest in RVI? RVI has finally listed on the New York Stock Exchange with the ticker symbol RVI, like I said. And what exactly should you be considering before investing? What are the risks involved? How does this work? How complex is it? How easy is it for you to also liquidate your investment should you plan to sell? And of course, this episode is brought to you by StockerTeam.com, the platform for retail investors to get coaching guidance on how to build long-term and sustainable portfolio. And of course, do your due diligence. Every information shared is for education and information purpose only. So let's jump right in. So, like I said, RVI, Robinhood Ventures Fund, is basically a publicly traded venture capital style fund. Anyone who is a retail investor who don't have the very complex accreditation can now invest in a whole lot of private companies, SpaceX, the likes of OpenAI, the likes of Databricks, and a host of other companies in this portfolio. It's now been listed on New York Stock Exchange. The IPO opened at about $25 per share. The structure is a close-ended fund, which is not necessarily open to so many complexities and is properly defined. And the goal per se, according to Robinhood, is a long-term capital appreciation from private tech companies. So unlike a normal VC fund where investors lock money for 10 years, RVI actually trades on the stock market like an ETF. So this likely or resembles the S&P 500, the Nasdaq 100, or even any other ETFs or index fund that you actually know. Now, let's get to the basics. The IPO itself has just happened. Why has this IPO happened at this particular price? What exactly should you be considering? And now that the RVI itself is now listed and fully trading on the market. So the fund size actually raised about 658 million in the IPO last Friday. Over 12.6 million shares were sold at about $25 per share. Like I said, potential size is actually up to about 705 million, depending on the allocation after this IPO. Now, this makes RVI to essentially trade at about 650 million plus venture portfolio, which has now been listed on the market. So, what exactly are the companies in the basket of RVI? So RVI basically invest in concentrated portfolio of about 15 to 20 private companies. But they wouldn't necessarily give out so many other companies or so many information about other companies in that basket. But amongst the 15 to 20 companies in the RVI basket, the major ones, number one is Databricks. The valuation for Databricks, of course, is private valuation. It's about 134 billion. We have Ramp, which is a fintech company. The valuation in the market, private market, of course, is 32 billion. Revolut, which is one of the biggest fintech, if not the biggest in the world, currently in the private market, it's valued at about $45 billion. Hairwallex, fintech as well, about 5 to 6 billion. Boom Supersonic Aerospace, about 3 billion. Aura, the ring, the smart ring, is actually about 2.5 billion. And we have Mercor, we have Stripe, which is actually about 159 billion. So let's look into the allocation of the portfolio. So in the allocation of the portfolio, the top holdings, Databricks actually has about 23%, Revolut about 14%, Mercor about 14%, Airwallex, Boom, Aura, Ramp actually allocated about 7%. So this is majorly, or just to put it in simple perspective, it's a mini private tech ETF. So we have several ETFs like the IGV, which is majorly software ETF, or software as a service ETF. So basically, RVI might actually give potential retail investors an exposure into the software fintech, or the general software market, or like perhaps maybe an alternative to IGV. IGV has really gone down, in value in the last 1 month because of the scaremongering about AI, data agents, AI agents actually, compressing the valuation of these companies, and these companies actually having less business to do, or these companies being replaced by a whole lot of Claude AI agents, a whole lot of agents from OpenAI, or even from other competitors. But that's a story for another day. But if you're looking for maybe just like a replacement or an alternative into investing into IGV, this RVI might actually be something that you might look out for. It's not financial advice, and that's what we do on StockAteam.com. We just basically explain opportunities, we explain the complexities, we actually explain a whole lot of things that you actually pay attention to before you actually invest, and you can do your due diligence on that. So if you love this video so far, please give us a like, subscribe to our channel so that you don't miss the following updates or any other videos that will be releasing. So how does this fund actually works? How does RVI works? So RVI actually operates like a public wrapper around a venture portfolio. So basically, step one, the fund has raised money through the IPO. Step two, after the IPO, which has now been done, investors will actually buy RVI shares. Now, anytime investors actually buy RVI shares, the fund will actually invest in private companies, which is Robinhood Ventures will buy stakes in late-stage startups. So these are not necessarily new startups that are just raising their seed round or Series A. These are actually well-established software companies, like the likes of Stripe, like the likes of Databricks, the likes of Aura, Mercor, and the rest. Step three is RVI itself. Investors can now trade RVI on the stock market. So step one, they've raised the IPO. The IPO is done. Step two, they use the proceeds to buy stakes in these companies. Step three, investors can now trade this stock or buy and sell it on the stock market, on the New York Stock Exchange. So even though the underlying private companies are private, or online companies are still private, you can continue to actually buy and sell the stock of RVI, because it's basically tracking RVI stakes in those companies, and investors can decide to exit or actually go in. So the net asset value versus market price is also something you actually have to look at. So, sometimes, depending on how RVI is going to be trading, it could actually trade above the net asset value, which makes it trade at a premium. And sometimes it might actually trade below the net asset value, which means it trades at a discount. So, do you want to wait it out for this asset or RVI itself to actually find its actual valuation, or you want to actually go in now? Maybe is this too expensive? Because you actually have to understand that all of the companies RVI has stakes in are private companies, and private valuations are totally different from public valuation. And at the end of the day, the market actually determines the share price. So you actually have to know why you are buying, when you are buying, and what exactly you are actually looking to do with RVI. Is this a short-term or a long-term approach? So let's look at something that's also very, very important. What happens when a portfolio company like RVI goes public? It's now public, but what exactly is going on? What exactly is going to happen in the short, medium, and long term? So this is one of the most important mechanics to actually put into consideration. So if a company in the fund goes public, so for instance, if any of the companies that RVI is holding becomes a public company itself, what exactly is going to happen to the holding in RVI? So here are the three options that RVI will actually be using going forward. They either decide to hold the shares after IPO, so they can still continue to hold those shares, and it tracks the performance of the new company that has now gone public. They either decide to sell the shares and realize the gains, or they actually gradually exit the position. Because RVI is like a managed fund at the end of the day, they will actually decide to do whatever if they seem to be the right approach. So at the end of the day, you are not necessarily buying RVI as an ETF that is just perpetual. It's not managed. RVI is going to be well managed. It's going to be well orchestrated over time, depending on what these companies are doing in the private or the public market. So the prospectus actually also explicitly allows the fund to hold companies throughout either before or after the IPO. So for instance, if Databricks actually goes public, for instance, at about 200 billion valuation, RVI stakes become fully liquid. So the fund net asset value will actually increase, and RVI stock could actually rise, because when people see Databricks doing very well, either at the IPO stage or post-IPO stage, they will actually want to buy more stakes in RVI or RVI shares. So it works both ways. If Databricks stocks actually tank after the IPO and RVI hasn't sold their stock or the holdings of Databricks, that could actually also have a negative effect. So also, there are some other things that you actually need to pay attention to. So why is RVI actually existing? I've actually said a few things about it, but we can't actually overemphasize the need for why people actually think that this is actually a very good move by Robinhood. So historically, retail investors can actually access private markets. Venture capital is restricted to accredited investors, especially in the US. It's highly regulated. You can't just as an individual, if you're not accredited, you can't just invest in venture capital. So RVI now comes into the market, the ecosystem, to say, hold on a minute, can we set up a fund that directly invests in these private companies on behalf of retail investors who are not accredited, and they can buy shares in the fund, and they actually get indirect exposure to these companies? That is actually what they are actually talking about. Perhaps, maybe, according to their vision, is democratizing private equity exposure. So what are the key benefits? For instance, you get access to unicorn companies. Databricks is doing fantastically well, and they're still private, and it's just accredited investors who have access to them before the IPO. Number two, liquidity. So in contrast to private equity fund, where you don't get really liquid until maybe when these companies actually they go public. So this actually allows you to still have access to privately held companies, and you can still buy and sell their shares indirectly. So you can buy or sell anytime on the stock market. It's also a way to diversify. So, for instance, a whole lot of late stage startups are not still public; they are in private, but they are doing very well. So it just gives you access to growth companies, especially companies that are going to change the future. Look at OpenAI; it's still private up to now. Having RVI buying into OpenAI is a very good approach to actually have access to OpenAI. So it gives you that multiple startups in one basket, in one vehicle, and no accreditation. Like I said, it's required. Anyone can buy or sell this stock RVI. Now, there's also some complexity, and this is most controversial part of the fund. And before we look into this, I will also say, if you've been enjoying this part is also a bonus. So please give us a like, subscribe to this channel so that you don't miss any update. So like I said, this is perhaps, there are some complexities that investors also, or prospective investors in RVI also needs to understand. Private companies do not have daily market prices. They are not traded on the public market, and so this valuation are done from time to time. Maybe valuations are typically determined when they have venture funding rounds, internal models that they follow, occasional market to market adjustments. So they are not necessarily publicly traded, and they don't necessarily track their stock price or their valuation every day like you can do for a public company, with their market cap, with their, outstanding shares, and also their share price on the market. So this means really valuations might actually update on a quarterly basis. They might not necessarily reflect the real market demand. So it is just not necessarily a warning. It's just something you need to pay attention to, that retail investors might actually really struggle to know the real value of these companies in the underlying assets. So at the end of the day, you also want to pay attention to this, because private market valuation is not always updated every day, and this might actually not be very, very clear, just on a day-to-day basis or even weekly basis. So the major risk really, apart from that, to actually pay attention to, like I said, valuation. In my private companies, most cases are always overvalued, or they even have stale price. If you look at what happened to the likes of Klarna, they were valued at tens of billions when they were in the private market. If you look at the current price of Klarna has now tanked by more than 60 to 70% after the IPO. Also, the net asset value sometimes has discount risk, because a closed-ended fund actually often trade below the net asset value. So you actually have to pay attention to this. The value of the asset this fund actually holds can actually be far higher than the actual trading valuation. So you might actually have something that is far worth less of what it actually is. It depends on what the market actually think is right or is not right at a particular time. So liquidity mismatch as well. RVI shares are liquid, but the underlying assets rather are not also liquid. So most of these private companies, a whole lot of people holding these shares for a long while, do not necessarily plan to sell them in immediate. Oftentimes they want to actually get out after the IPO or even during the IPO. So you actually have to understand this. Venture capital risk, startup fail frequently. A lot of startups don't necessarily make it outside of the late stage. Many of them get wound up. Some of them also get displaced by innovation. Pay attention to this. Also, the fund charges a fee. The fund charges about 2% annual management fee, and this will actually reflect in the value of what you hold at any given time. So the key debate around this fund, some analysts actually see it as a major innovation Others see it as a very, very risky experiment because at the end of the day, private market valuation is very murky. Sometimes it could be shady and sometimes very, very unpredictable. So a whole lot of analysts are actually warning that it could actually expose a lot of inexperienced investors to venture capital volatility and opaque valuation. So in the long run, RVI is actually existing because a whole lot of companies stay private longer, and IPOs oftentimes happen later in the life cycle of most companies. A lot of growth companies actually see a lot of their growth before the IPO. Oftentimes, some companies just want to offload into the market, and the companies have actually perhaps sometimes they've overrun their power or their strength, and early stage investors just want to get out. So you actually have to pay attention to some of these. For instance, SpaceX, Stripe, Databricks are now planning to go on an IPO very soon. SpaceX maybe before the end of this year, Stripe also, but Databricks as well is also planning to go on IPO. So at the end of the day, what do you think? Do you actually think Robinhood is just using this to get more money from the market? Do you see this as an innovation for retail investors to get access to private companies they wouldn't get access to on a normal day because they don't have the accreditation, they don't have the qualification, they don't necessarily also have that ability to invest on a long-term perspective that remains very illiquid? Let's get your comment, your feedback in the comment section below. We love everyone. Thank you so much for watching this. Would you be buying RVI? Is this something that you actually believe? You want to wait it out and see this experiment? And it's left to you. And of course, please give this video a like, subscribe to the channel so that you don't miss any updates. We'll see you in the next one. Keep investing, keep growing. Take care and bye bye.